Dear students, in the last session we have been discussing about receipts and payments account. Today we are going to understand the preparation of income and expenditure account, wherein we are going to study about what is income and expenditure account. It is an account which is prepared to know the surplus or deficit of non-profit organizations. It is the summary of income and expenditure for the accounting year. While preparing income and expenditure account, it is prepared on the basis of accrual concept. It includes only revenue items and the balance at the end represents surplus or deficit. Surplus means excess of income over expenditure, whereas deficit means excess of expenditure over income. If income exceeds expenses, it is a surplus. If expenditure exceeds income, it is a deficit. All the revenue items which are relating to the current period are shown in this account, and expenses and losses are shown on the expenditure side or debit side, and incomes and gains are shown on the income side or credit side of the account. Income and expenditure account shows net operating result in the form of surplus, that is, income exceeds expenditure, deficit if expenditure is more than the income. Dear students, let us understand about the steps involved in the preparation of income and expenditure account, wherein first step that we have to follow is refer the receipts and payments account, and opening balance and closing balances of cash in hand and cash at bank must be excluded because it has no connection with that of income and expenditure. Consider only the revenue receipts, which is to be shown on the income side of income and expenditure account after making all the adjustments. Take only the revenue expenses to the expenditure side of income and expenditure account after making all the adjustments as per the additional information provided relating to the amounts received in advance and those not yet paid. In addition, we have to consider the following items which are not appearing in the receipts and payments account. First adjustment that we have to consider is depreciation on fixed assets, which should be shown on the debit side of income and expenditure account. And second item that we have to consider is provision for doubtful debts. Usually it will be found in the adjustments and it should appear on the debit side of income and expenditure account. Profit or loss on sale of fixed assets must be taken into consideration. In case of profit, it should appear on the credit side, that is on the income side of income and expenditure account, and in case of loss, it should appear on the debit side of income and expenditure account. Dear students, the point that you have to make a note of while preparing income and expenditure account, on the left hand side we have to show the expenditures, and on the right hand side of an account we have to show all incomes. How do you remember these aspects is expenses must be debited as per the nominal account rules, incomes must be credited as per the nominal account rules. This is the basis on which you can remember debit side, that is left hand side you have to show expenditures and right hand side you have to show incomes. Let us now understand about the basic differences between income and expenditure account as well as receipts and payments account. The differentiating point number one is nature. On the basis of nature, income and expenditure account is just like a profit and loss account, whereas receipts and payments account is a summary of the cash book. The other point of difference is nature of items. Income and expenditure account shows only the revenue items, revenue incomes as well as revenue expenditures. Whereas receipts and payments account shows both revenue as well as capital nature of items. Period for which it relates. Income and expenditure account shows only the incomes and expenditures relating to the current period, whereas receipts and payments will show all the items relating to the current period, previous year, as well as succeeding period depending upon the receipts and payments during the year. Debit side, in case of income and expenditure account, all expenses, that is revenue expenses and losses, will have to be shown on the debit side, whereas in case of receipts and payments account, we have to show all the receipts, whether current or relating to previous year or next year, in the debit side of receipts and payments account. Credit side, in the income and expenditure account, all incomes and gains must be shown on the credit side if they are revenue in nature, and all the payments must appear on the credit side in case of receipts and payments account. Depreciation will be included in the income and expenditure account, and it should be shown on the debit side of income and expenditure account. And in receipts and payments account, as it is non-cash item, depreciation will not be included. Opening balance. In case of income and expenditure account, there is no opening balance. It will not start with opening balance, whereas receipts and payments account usually begins with balance, opening balance, balance of cash in hand or cash at bank, or sometimes maybe overdraft at the beginning. Closing balance. Balance at the end of any particular accounting period represents excess of income over expenditure or excess of expenditure over income, and receipts and payments account shows balance as cash in hand or cash at bank at the end of the year. Sometimes it may be bank overdraft. Now let us discuss about the preparation of balance sheet. Take the capital or general fund as per the opening balance sheet and surplus from the income and expenditure account. Add entrance fees to the above two items to the extent capitalized. In the sense, only that portion of the entrance fees which is capitalized must be added to the capital fund. Legacies must be added to the capital fund. Life membership fees, as it is capital receipt, that should also be added to the capital fund or general fund which are received during the year, and all these items are to be added to the capital fund. Take all the fixed assets with additions after charging depreciation and show them on the asset side. Ascertain the following amounts from the receipt side of receipts and payments account with income side of income and expenditure account. Subscriptions due but not yet received. Incomes received in advance. Sale of fixed assets. Items to be capitalized. Compare the items on the payment side of the receipts and payment account with the expenditure side of the income and expenditure account. Ascertain the following: outstanding expenses, prepaid expenses, purchase of fixed asset during the year, and depreciation on fixed assets. All these adjustments are to be taken care of while preparing income and expenditure account as well as balance sheet. Stock of consumable items like stationery in hand should also appear. Closing balance of cash in hand and cash at bank must be shown on the asset side of the balance sheet. Dear students, with these discussions, we have understood about the fact that differentiation between capital and revenue items is a must. All capital items, that is capital receipts and capital payments, will appear in the balance sheet, whereas all items of revenue receipts and revenue expenditures will be shown in the income and expenditure account. Students, now let us discuss about some of the peculiar items which we have to understand in the process of preparation of income and expenditure account as well as preparation of balance sheet. Subscriptions. What do we mean by subscriptions? It is a membership fees which is paid by the member on annual basis. Subscriptions are paid by the members is shown as receipt and income respectively in the receipts and payments account as well as income and expenditure account. In the income and expenditure account, only that subscriptions which is received for that particular year will have to be shown, for which we have to make an adjustment regarding outstanding subscription of earlier year, outstanding subscriptions during the year, pre-received subscriptions of earlier year, and pre-received subscriptions during this year. And ultimately we have to ascertain the subscriptions which is relating to this year, and that should be finally shown in the amount column while showing subscriptions. Another item that we are going to take up in in the preparation of income and expenditure account as well as balance sheet is donations. It is a sort of gift in cash or property. There are two kinds of donations. One is specific donation and the other one is general donations. Specific donation is to be utilized to achieve specified purposes. It is called as specific donation. Examples for specific donations means these are the donations which are meant only for specific purposes, like construction of building, extension of a building, computer lab construction, or any other such nature of expenses or donations. It should be shown on the liability side of the balance sheet whether the amount of donations is small or big. Whereas the other kind of donations that may appear are Donations which are to be utilized to promote general purposes of the organizations. They are treated as revenue receipts as it is a regular source of income. If the amount is big when compared to the other receipts, it is to be treated as capital receipt and added to the capital fund on the liability side. When compared to other types of receipts for a particular organization, if the amount is small, then it will be generally treated as revenue receipt and it should be shown as an income in the income and expenditure account. Legacies. What are legacies? Legacies is the amount received as per the will of the deceased person. It is directly added to the capital fund in the balance sheet as it is not recurring in nature. As per the will of a donor, on his death, amount will be received by the not-for-profit organizations and such an amount is called as legacies. Hence, it is not recurring in nature. It is called as capital receipt and it should be added to the capital fund. The other item that we are going to discuss is life membership fees. Some members pay their membership fees in lump sum instead of paying annual subscriptions. It is treated as capital receipts and credited directly to the capital fund or general fund. Another item of income is entrance fees. It is also called as admission fees, which will be paid only once by the member at the time of becoming a member. Sale of old assets. How are we going to treat the income that is arrived or that is received by way of sale of old assets? Receipts from the sale of old assets appears on the receipt side of receipts and payments account and the gain or loss on the sale of asset is taken to the income and expenditure account. Please make a note of it, dear students. Only the gain or loss on the sale of assets should be shown in the income and expenditure account, whereas the book value of asset which is sold will have to be deducted from the particular asset on the asset side of the balance sheet. These are the adjustments which we have to consider while preparing the balance sheet. Sale of periodicals. It is an item of repetitive nature and which should be shown as an income. Sale of sports materials. Used materials like old balls, bats and nuts etc. when sold is regular income with any sports club. It should be treated as revenue receipt and taken as an income on the income and expenditure account. If sports materials durable are sold, it is treated as like other assets sold. Means only the profits or losses on sale of such sports materials will have to be taken to the income and expenditure account and the book value of such sports materials will have to be deducted from the sports materials on the asset side of the balance sheet. Payments of honorarium. It is the amount paid to the person who is not the employee of an institution. It is an expenditure which should be shown as an expenditure in the income and expenditure account. Endowment fund. What do we mean by endowment fund? It is a fund arising from a gift, the income of which is used for a specific purpose. It is a capital receipt and shown on the liability side of the balance sheet as an item of specific purpose fund. Another item that we have to consider is government grant. Schools, colleges, public hospitals, libraries depend upon government grant for their activities. These grants, if recurring in nature, for maintenance, it is treated as revenue receipt and are shown as income in the income and expenditure account. Grants for specific purpose, maybe grant for construction of a swimming pool, con- construction of a commerce block, or for construction of a pavilion, etc., are treated as capital receipts and transferred to the specific fund on the liability side of the balance sheet. Special funds or specific funds. Special funds may be created for certain purposes or activities, such as tournament fund, which is meant for conducting tournaments, sports fund, which is meant for holding of any sports, sports funds, which is meant for sports, and prize fund, which is meant for giving away the prizes or meeting the prize expenses, etc. Such funds are invested in securities, and the income earned on such investments is added to the respective fund, not credited to the income and expenditure account. Similarly, the expenses hereby must be deducted from the special fund. If the expenses incurred is more than the income, then the negative balance will have to be shown in the debit side of income and expenditure account. This is a point which you have to consider while preparing income and expenditure account. When there is negative balance in the special fund because of excess expenses over the funds, which has to be shown in the income and expenditure account. Otherwise, expenses must be deducted from the special fund. Income earned on that special fund will have to be added to the special fund. Dear students, after discussing about these aspects, you have come to know about what is not for profit organization. It is an organization which is established for the purposes of rendering services either to the society or to the members of such organizations. And you have understood about the features of not for profit organizations and what are the final accounts or financial statements which we have to prepare in relation to not for profit organizations. We have to solve problems relating to preparation of receipts and payments account, preparation of income and expenditure account, and preparation of balance sheet. Dear students, in the next session, we are going to solve problems relating to the preparation of receipts and payments account. Thank you one and all for watching the session.